Welcome back. I've been doing this recording after fairly long time, but the reason was there was no setup, there was nothing new to talk about, nothing more than that. Today we are going to be talking about a good trade setup that I see. It's on the short side. Uh, Before I talk about that, quickly the risk disclosures. It's risky game. Please believe and understand that it's your own hard-earned money. You don't want to gamble with it. Please use this for only guidance and learning perspective. If you are putting in your own money, take your own risks and make yourself responsible. With that, let me start with the weekly chart on Nifty. It's very interesting looking. If you look at it, we had a rally starting sometime around 2016, went all the way to triple 100 levels. Then we had a small correction coming down to about 10,000 level and followed up with another decent rally which took us to all-time high of near about 11,700 levels, and then we corrected back to 10,000, and now we are back at the same levels of around 11 triple 100. If you understand the patterns, we probably are making a head and shoulder pattern. So if we correct from here, we would do a head and shoulder pattern with target of near about the same amount of the head, which is, let's say this is your head, 200%. I need to plot it here. This is the one. So if it's a proper head and shoulder, I would go with target of near about 8,100. And if it's not it, even if it's truncated, even if it wants to do triple bottom, one bottom, two bottom, and maybe third bottom, and then go up, it would be 10,000. So my first target here would be near about 10,000 if I believe that we have indeed turned around. Okay, so this is your weekly chart. Let's look at the daily chart. Daily chart actually talks very interesting. I have plotted some levels here. So if you look at it, we had talked about this supply levels, which the market chose to broke, went up, and then came back. We are little below the supply levels. If this was a fake breakout, then probably what I'm saying is right. If it was a genuine breakout, Monday we will see. It's the next day is going to tell us whether it was a fake breakout or the genuine breakout. If it was a genuine breakout, we will turn up, start moving up, and then the next target is double 1,700 odd levels. These are the targets. If we fail to sustain these levels, if we fail to sustain levels of 11091 or again 11100, then we would correct, and the targets, the first target is 10,000 levels as we talked about, and the next eventual target would be near about 8,100. So we are at a point where we probably would be able to take a trade with a very short, very small risk of near about 100-200 points. So if we take 200 points of risk, the first target itself is about 900 points, giving me a risk reward of 1:4, 1:5. Understand? Now, why do I say so? The first one is from the Elliott wave principles. If this was A fall, and if this was B, we have done 61.8% retracement, and look at the nice reaction that we got from 61.8%. Of course, this is not a confirmatory step just saying that we retraced up to 61.8 and then came back. But then if you really look at it, if you look at, there are two, three things that I want you to look at. This is India VIX. If you look at the India VIX has been going down, showing that this probably has been a sideways setup. If you look at I'm going to show you this with a larger pane. This is your ADX. If you look at the ADX has been going down, and now just now it has started going up. So if you really look at it, there is a chance that the ADX might go up now, and this was the wave 4 or wave B, whichever way you want to look at it, doesn't matter. If you look at the shorter time frames, 15-minute time frame, if you really look at it, we already have started the trend. Okay, so now if you were to take a trade here with a stop loss of around 11040, which should also be not a bad idea. So we could have taken a trade here at the end of the day, Friday, with a stop of 1122, or maybe even stop of 11123, the latest high. We should be the first target would have been 10,000, or maybe there are intermediate targets on 15-minute charts. This is the first target, 11800, but I'm fairly sure that these targets are going to be broken. Let's look at little bit on the options. If there are people who don't want to take so much of risks, I would convert that into let's say if I do long straddle, long put, long call, 11,000. There's a reason why I'm going with 11,000, because my stop loss is near about 11,000. Then I get a graph something like this, and the idea is to hold this for no more than this expiry, if it does not show the directional movement. If it shows the directional movements, then very good. If it does not, then by the expiry or little after the expiry, you just get out of it with the maximum loss potential of near about 85 points. Okay, so if you do 85 points, and let's say the target of 10,000 is achieved, we still are talking about near about 560 points here, which is more than 1:5. It's almost more 1:6, 1:7 risk reward. And the beauty of this is it goes both ways. If your target is, let's say, 11,700, which is on the upside, you still make near about 300 points, which is 1:3 risk reward. So it is again a fairly good setup. Will 10,000 happen in month of March? We don't know. Will 11,700 will happen in month of March? We again don't know. If we don't know, then we could also look at it to convert that into a butterfly, long butterfly, not short, with 10,500 being returned, and the graph looks something like this. The plot today and then go all the way till 28th of February. So my maximum loss risk here is now only 50 points, and with that, let me just make this even bigger. With that, if we are going to target 11,700, my win would be 124.125, which is almost 2.5 times, and at 10 it is 150. So almost again 1:5. The risk rewards are near about the same. The good part is here you are taking both ways trades. let's say you are 100% bear and you are sure that you don't want to have anything on the long side. So you long put 11,000, short put 10,500. This is how the graph would look like. And let's say I'm going to be getting out by 28th of February. Here, my maximum loss is still near about this, which is 130 points, and at 10,000 my profit might be about 300. So this is little less than 1:3 risk reward, but still it's a good point to have. Let's look at the specific tickers. So what I have done is I have done my relative movement, which is also there on my site, and also I talk about it in the videos. If you look at that, these are some of the stocks which show the conversion from bulls to bears. This is bear starting. Out of these, I would say some of them are really good, like Tata Motors. If I look at Tata Motors, let me go to relative performance. Look at this relative. You have you here already have the double top being made, a W, perfect W. So if you say I would retrace almost the same amount, then you are talking about negative numbers. So is Tata Motors headed for a crash? I am not very sure, but it is definitely a possibility. It was equivalent of about 20 rupees in 2009. We will expect levels of 2009 here. Very good place. Another one is Reliance Capital. Reliance Capital, if you really look at it, this is exactly similar but the opposite way graph of that of Reliance Industries. I'll show that also if you want. Reliance Capital from 2009 until 2019, 10 years, it has done complete sideways move. I'm comparing it with the 2006 to 2008 rally. So if you look at it, 2006 it was around 300, which went to almost 3,000, 2,500 levels in less than 3 years, and then corrected in almost the same time, and then it was sideways compared to this move. And now that sideways move has been broken recently this week. Where will it go? I believe this is going to go to zero level, and it is going to zero level sooner than we can think. So these are some of the nice looking plays. You will see, of course, the typicals of Jet Airways. Jet Airways is also fairly good story here. If you really look at it, it has broken all the recent supports, and there is a chance, very good chance, that it will break this final support of around 135 levels. And if it breaks 135, that is my next target for Jet Airways as of now. And once it breaks, this is going to go the again to dungeons. Believe me, there is a huge possibility of bear rallies. There is possibility of these guys giving 5%, 10% rallies, but you should happily short these levels at those rallies. So that's all I had to say. Best of luck. I believe that there is one more. Let's just talk about is the cloud. Cloud on daily is looking extremely good, with a good possible support at around 10,600 levels. So 10,600 levels, it may come back and then bounce back. That's what the cloud says. But it's rather than that, I would probably look at the weekly clouds and hope that now is the time for it to break the weekly clouds at 10,600 levels. And if it breaks, then it would go way down. So yes, it's not a perfect trade setup, but the position is perfect. You have got 1:5 risk reward ratio, 1:3 on the other side if the setup fails. So why not take a risk if you can afford that? Thank you. Bye bye.